Let me tell you about a real phenomenon that nobody wants to admit exists. There are people in this country earning $200,000 a year who are one missed paycheck away from financial disaster. Doctors drowning in debt. Lawyers who cannot cover an unexpected $2,000 expense. Engineers with six-figure salaries and zero savings. This is not a myth. A study from Lending Club found that 1 in 3 Americans earning over $150,000 a year lives paycheck to paycheck. 1 in 3 at $200,000 a year, that is 16,666 pounds hitting your bank account every single month. And somehow, it is all gone before the next one arrives. If you are earning good money and still feeling broke, this video is for you. And if you are not there yet, but you plan to be, pay very close attention. Because the habits that keep high earners broke are the exact same habits that keep average earners broke. The only difference is the number of zeros. Today, I am going to show you exactly why this happens, why the conventional advice fails completely for high earners, and then I am going to give you a specific AI-powered system that addresses every single root cause, not theory. A system you can start building today. First, let us understand why this keeps happening, because the answer is not what most people assume. When most people hear that a $200,000 earner is broke, their first instinct is to say the person is just irresponsible, bad with money, spending on luxury items they cannot afford. And sometimes that is true. But more often, the real picture is far more complicated and far more systematic than that. There are 4 specific reasons high earners end up broke, and every single one of them has nothing to do with intelligence or discipline. Reason 1, lifestyle inflation moves faster than income. The moment income goes up, spending follows immediately. New car, better apartment, nicer restaurants, better vacations, private schools for the kids, a home in the right neighborhood. These are not frivolous decisions. Many of them feel completely reasonable given the income level, but they happen automatically, without a plan, and they consume every dollar of every raise before it has a chance to build anything. The term for this is lifestyle creep, and it is nearly invisible while it is happening. You do not feel like you are overspending. You feel like you are living appropriately for your income level. That feeling is exactly the trap. Reason 2, high income comes with high complexity. At $200,000 a year, your financial life is genuinely complicated. You have multiple income streams, stock options, bonuses, RSUs, a 401k match at work plus a potential backdoor Roth, a mortgage, investment accounts, possibly a business or freelance income on the side, tax obligations that require quarterly estimated payments. Most people at this income level are managing a financial ecosystem that would genuinely benefit from a system. But because they are busy, because high-earning people are almost always extremely busy, that system never gets built. Money flows in and flows out with no real architecture behind it. And complexity without structure is how $200,000 a year disappears. Reason 3, the psychology of high income kills urgency. When you are earning $200,000 a year, it is very easy to tell yourself you will deal with your finances later. There is always more money coming. A bad month does not feel urgent the way it does when you are living on $45,000 a year. The consequence of financial carelessness is delayed, and delayed consequences are consequences most people never address. This is why high earners often do less financial planning than people earning half as much. The urgency is gone, and without urgency, nothing changes. Reason 4, conventional advice is designed for the wrong problem. Here is the part that should make you angry. The mainstream personal finance advice most people consume is designed for people trying to get out of survival mode. Cut your expenses. Make a budget. Save 3 to 6 months of expenses. Invest in a Roth IRA. That advice is genuinely helpful for someone earning $45,000 a year. For someone earning $200,000, it is almost completely irrelevant. You do not have a spending problem, you have a systems problem, a complexity problem, a behavioral problem that manifests differently at high income levels. The conventional advice does not address any of that. And so high earners read the same personal finance books as everyone else, nod along, and then do nothing, because nothing they read actually speaks to their situation. This is the gap, and this is exactly where AI changes everything. What I am about to give you is not a single tip. It is a 4-part AI system specifically designed for high-income earners who are tired of watching money disappear despite making more than most people will ever earn. Each part addresses one of the 4 root causes I just described. STEM Part 1, the AI Lifestyle Audit. The first problem was lifestyle inflation moving faster than awareness. So the first part of the system is building real awareness using AI. Here is exactly what you do. Export the last 90 days of transactions from every account you have. Every bank account, every credit card, every payment platform. Paste everything into an AI tool and give it this prompt. Analyze my last 90 days of spending across all categories. Identify which expense categories have grown the most over the past year compared to my income growth. Calculate what percentage of my gross income I am spending in each major category. Flag every subscription or recurring charge, then show me my actual savings rate and compare it to what it should be at my income level given standard wealth building benchmarks. What you get back will likely be uncomfortable. That is the point. You cannot manage what you cannot see. For high earners, the lifestyle inflation is almost always hiding inside categories that feel justified. Dining, travel, services, childcare, home expenses. AI finds it without judgment and without the emotional charge that comes from having a conversation about money with another person. Do this audit every 90 days without exception. Put it in your calendar right now. The 90-day audit is the foundation of the entire system. STEM Part 2, the AI Complexity Manager. The second problem was financial complexity without structure. High-income earners have too many moving pieces and no architecture to connect them. Here's the prompt sequence that solves this. Start by giving the AI a complete picture of your financial life. List every income source, every account type, every major asset, every debt, every tax obligation. Then, ask it to do 3 things. First, map my complete financial picture and identify any obvious gaps or inefficiencies you can see. Second, tell me what financial accounts and structures someone at my income level should have that I may be missing. Third, prioritize the 5 most important financial actions I should take in the next 90 days, given everything I have just told you. What AI does here is act as a financial architect. It looks at your entire system from the outside and tells you what is missing. Maybe you are not maxing out your HSA. Maybe you have cash sitting in a checking account that should be in a high-yield savings account. Maybe you have never looked at whether you qualify for a backdoor Roth contribution. Maybe your 401k is invested in the default target date fund when it should be optimized for your specific situation. These are not exotic insights. These are the standard moves that genuinely wealthy people make that most high earners never get around to. AI maps your entire financial picture and tells you exactly what to do next. STEM Part 3, the AI Urgency Trigger. The third problem was that high income kills urgency. There is always more money coming, so nothing ever gets done. This part of the system is about manufacturing urgency artificially, because the urgency is real even if it does not feel real. Here is the exercise. Give the AI your current income, current savings rate, and current age. Then ask it to calculate 3 specific numbers. First, how much wealth you will have at age 65 if you continue at your current savings rate. Second, how much wealth you will have at age 65 if you implement a proper savings and investment strategy starting today. Third, what the dollar difference is between those 2 outcomes. Then ask it to calculate your wealth destruction number. That is the exact dollar amount your current habits are costing you per year in lost compound growth. I have done this exercise with a hypothetical $200,000 earner who saves 5% of their income. The difference between that and saving 25%, which is entirely achievable at this income level, is often over $3 million in lifetime wealth. Over $3 million. Gone. Not because of bad investments, just because of habits that felt fine in the moment. Nothing creates urgency like a real number. Let AI calculate yours. SY-STEM Part 4, the AI Automation Architect. The fourth problem was that high earners are too busy to manage their finances consistently. The solution is not to try harder. The solution is to build a system that runs without requiring daily attention. This is the automation layer, and AI helps you design it. Give the AI your complete financial picture, including all accounts and income timing. Then ask it to design an automated money flow system for your situation. The prompt goes like this. Design an automated system for my finances that moves money to the right places the moment it arrives, requires minimal ongoing management, and is optimized for both wealth building and lifestyle enjoyment at my income level. Include specific dollar amounts and timing for each transfer based on the information I have given you. What you get is a blueprint, a specific sequence of automatic transfers that happen every time your paycheck arrives. Retirement accounts funded first, emergency fund topped off, investment contributions automated, a specific discretionary amount left in checking for spending without guilt. When money moves automatically before you can spend it, lifestyle inflation cannot touch it. The system protects your wealth building from your own psychology. And high earners who implement this almost universally report that they do not miss the money that gets automated away, because they never see it in the first place. The reality of high-income wealth destruction. It is not about intelligence. The people earning $200,000 a year and still feeling broke are not stupid. They are busy. They are complex. They are operating without a system in a financial environment that rewards people who have one. AI gives you that system. It gives you visibility into your lifestyle inflation. It maps your financial complexity and tells you what to fix. It makes the cost of inaction impossible to ignore. And it designs the automation that makes doing the right thing the path of least resistance. 1 in 3 people earning over $150,000 is living paycheck to paycheck right now. The other 2 are not smarter. They just have a better system. Start with part 1. Run your 90-day audit today. Drop your biggest finding in the comments. I read every single one. If you want the complete wealth building framework that takes you from this system to full financial independence, watch this video next. Everything you need is there.